So this is an important indicator because we always look to Apple's revenue in China as a key driver. Of course, we know that Apple had warned about its guidance earlier this year because of weakness in China, and we've been looking for general signs of if that might be picking up when we look at the bigger macro picture. So taking a look at what to watch in Apple's earnings today, China iPhone sales are number one. Now, they don't break out iPhone numbers, we know that, but we do get China revenues as a segment, so we'll try to be parsing through that for looking specifically at the smartphone figures. The other thing to watch is the effect of the price cuts. Now, we know that in order to sort of stimulate demand, last quarter, Apple initiated a series of price cuts. We've seen a general trend in the smartphone market of people holding on to their phones for longer, not upgrading, and the question is if those price cuts had any impact. Another important thing to watch, as always with Apple now, is this talk about services and the services growth that we're seeing. So there's a general kind of mix of sentiment among analysts how quickly this services sector can grow. And that's Apple's App Store. It's this new streaming service that is we're hoping to get more details about in the coming quarters. And it's that new service that was announced earlier this year. Finally, I wouldn't be talking about a big tech company these days if we didn't talk about regulatory concerns. We, of course, got that DOJ review of big tech companies. It's likely that Apple is included on that, and any commentary that we get from CEO Tim Cook or any of the other executives on the regulatory front will be important to listen
Going back to my original point, which it was nearly a year ago now, I think about 9 months ago, we were told, okay, don't look at individual sales anymore. It's all about SaaS, software as a service. The company told us where to look, but didn't want us to look in a certain place anymore. Are the iPhone sales as important for analysts, or have they obediently all lined up to just look at SaaS now and the figures that Apple wants us to look at?
Many of the analysts continue to talk about the impact of services. However, iPhone revenues are still almost half of Apple's revenues, so it's important to still look at those figures when you're looking at the outlook for this company. And if it looks like they are losing market share to the other players, we saw last year that figures showed that it was the number 3 smartphone seller compared to Samsung and Huawei. If there's an indication that it can't continue to boost sales in that core part of its business, the money won't be there to invest in these new platforms like SaaS.
I've historically looked at the shares and seen about 50 analysts there, and most of them have been buyers of this stock. I'm interested now that 23 out of a sampling of around about double that are now buyers or strong buyers, 17 holders and 3 sellers. That looks like a sea change to me, as people are getting a little bit concerned about the growth story going forward.
It is a sea change, and a part of that is, of course, this bigger macro story that Apple has been very much a part of. Apple is one of the companies that is certainly not immune to these tensions that we've been seeing over trade. And Tim Cook has been an outspoken person with the Trump administration saying we can't have these barriers in place because it will affect our entire supply chain. So analysts can't really ignore the backdrop that's happening here. Even if Apple's trying to make this shift to become another company, it still is an important global.
All right, well, we'll look with bated breath. We always do.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.